All right, we are live. Hey, everybody, it's Saturday. It's 12 p.m. Eastern. I've got Michael Bretthauer with me, and I've got our special guest. If you do not know him, he comes to all of our seminars. He talks and gives these amazing, these amazing speeches to our folks and delivers a ton of content. I've got Mr. Matthew Griffith, a friend of mine for years and years and years. Welcome to our YouTube live stream. How's everything going for you? I know you're down in sunny Florida, but hey, it's sunny here in Indy too, bud. So
awesome. We just don't got the beach.
I don't have a beach out backyard.
Yeah, we're missing something.
Yeah, it's great. It's great. It's sunny. It'll be 80. I think the lowest high this week is 81. So spring is here. Sunshine kills the virus, so I'm excited about that.
Yeah, you're in the clear down there, aren't you?
I think there are only 2 cases in our county, and one was a banker who works here but lives in another county.
Oh,
So yeah, basically it's corona free down there.
nice.
Where I am.
No, that's good. That's good. Yep. Let me do this really quick. I want to make sure folks can hear us. Give us a thumbs up if you can hear us. There's a little button below on YouTube. Just click that thumbs up button so that we know we can see and hear you. Also, too, let us know that you're there. Type in a comment. Let us know where you're from. Is anybody else from Florida? Let us know where you're at. We're going to dive into some really great information here, especially when it comes to business entities and all that kind of stuff. So make sure you drop a comment and let us know where you're from. That would be great, great, great. So let's do this because I wanted to get this question. We had this question come in offline. I wanted to get this one taken care of really fast because I think it's really funny. And also, too, it's something that happened to me back when I first got started in 2008. I was foolish enough to think this was the way to go for setting up a business entity. So why don't we have this one appear up on the screen first? Or hold on. Let's call out some folks. We've got Sharon is with us. Oh, she's from Jacksonville. Okay.
Hey, Sharon.
Oh, man, we've got Don from Dade City, Florida. Oh my gosh, we've got another person from Florida. Man, we've got everybody on Florida with us here right now.
That's the only reason I'm down here, because I knew all these people were here.
Nice. That is so cool. So yeah, out of most of the people that are watching it, they're all from Florida. Very cool. So I wanted to hop into this question here. Should I set up an LLC in a state like Nevada? And there's some other states out there too that, you know, some of these gurus are pitching for them to set up in. So should they do that from a standpoint of setting up an LLC, even if they don't live there?
No. Okay. So here's the deal. There are a lot of gurus, which I call legal witch doctors. And they proclaim that incorporating or forming an entity in a state that has favorable tax treatment or that has favorable asset protection treatment, you should go there, and then you're magically immune from any tax issue or any liability issue, and it's completely debunked by case law. So if you own real estate in Florida, going to Nevada to form an entity, all that does is it makes you susceptible to 2 bodies of state law. Now you got to comply with Florida law and Nevada law. Maybe Florida is a bad example because it has no income tax anyway. But if you live in Indiana and you form a Nevada entity and your investments are in Indiana and you're making income essentially in Indiana, or you have to file an Indiana income tax return, guess what? You're not immune from Indiana taxation. You're still going to pay income tax there. So you can't go to Nevada and evade taxes and say, well, wait a minute, I heard about this from a guru at a seminar. No, the Indiana Department of Revenue will not accept information you got at a boot camp as controlling authority. They still want their taxes. In terms of liability, if I have a property, I have investment property in Florida. I'm probably going to go buy another one this week. I'm susceptible to Florida law because my property's in Florida. I have to comply with Florida law. I can't go to Nevada and say, well, Florida law doesn't apply to me anymore because I have a Nevada LLC. So I'm still stuck with Florida law or Indiana law or Ohio law, wherever my investments are located. So that is such a horrible piece of advice. And frankly, it's promoted by people who have companies in Nevada who are trying to sell a service.
Right.
Right. So they want you to form a Nevada so that you can continue to pay them every year for maintaining an entity that you don't need.
No, exactly. And I had to learn that the hard way because there was a company out in Nevada that was pitching this, and we set everything up there. And at the end of the day, it was completely useless. They wanted to say, hey, you can't pierce the corporate veil and all the blah, 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 blah. But
not true.
You have to essentially, if you want to get those benefits of living from Nevada, you have to live there, what, 51% out of the year?
Yeah, well, each state has its own rules on taxation. So you have to be a resident, which means you have to give up your residency in the other state. You can't reside. Most states will not allow you to declare residency in two places. So if you want the benefits of Nevada, you have to be a Nevada resident, which means you have to, under Nevada law, you have to have a homestead there. It's not enough just to have a LLC in Nevada. You have to be a resident of Nevada, which means you're giving up your Indiana residency or your Ohio residency or your Montana residency, whatever state you're actually in.
Yeah. And Jay,
oh, go ahead.
No, I was going to say, I remember doing that too. Cause after you did it, I was like, well, I guess this is the way to do it. Cause it's, it's what everybody's talking about. And when I remember about it, it was a lot more it was a much more expensive lesson to learn than when we did it the right way. I'm like, oh, this is nothing what I remember paying for that first time.
No, they charge for the business entity. And then they're like, well, if you want to really get things going, you should sign up for establishing your business credit. So I think I signed up for a package that was like $3,000.
Yep.
Yeah.
It was $3,000.
That's what at the time.
It was. I remember that $3,000 because that's always haunted me. I'm like, because I remember I was paying it. I'm like, what did I actually get out of that? I think I got a stamp and a fancy book, and I never got to use any of it.
It's actually a negative. Here's why. Because when you form an entity in another state, now you got to comply with laws in two states. So you actually increase your burden, you increase your liability risk. That's the ironic thing. You actually make it more likely that you're going to get sued in two states as opposed to one. So it's forming an entity in a state where you're not really engaged is antithetical to asset protection. It doesn't further asset protection. It makes you weaker.
Yeah, from this part right here alone, we should get 1 million views. People should know this information, and unfortunately, the witch doctors out there are saying, "Well, what are the other states?" So there's Nevada, and what are the other ones that these guys are pitching?
Well, they used to pitch Nevis Trust, and I guess Nevis is an island in the Caribbean, right? Yeah, but the debtor states, the place to go if you owe people money are Texas and Florida. Those are great states. It's hard to there's protection in Texas and Nevada or Texas and Florida that aren't available in other states. So a lot of people run to those states. But get this, my Florida real estate is actually owned by an Indiana LLC.
Makes sense.
I got to file an income tax return in Indiana. Why make my life harder by having to file 2 tax returns? It's crazy.
No,
So.
exactly.
So out of that 1 million likes, because we just saved them $3,000 plus increasing their liability and having to make it harder to file your tax returns at the end of the year.
Yeah, you can send a check. My address will be at the bottom of the screen.
We'll have that up there. Let me give a shout out. We've got Nick Weaver here. I don't know if he's part of INRIA or not. I'm not sure if we've met. Yeah. Absolutely. So welcome, Nick. We've got Jason from Janice Phillips, Little Rock, Arkansas. Very cool. Welcome up. I'm not sure if Sharon's here. Yep. Okay, cool.
Hey, Sharon.
So let me do this one because I think this would be good for the next part. Because we've got some folks that may be watching this later on that might be brand new. So let's get this one knocked out. Should I form a business entity even if I haven't closed my first deal yet?
Great question.
Yes, if you're going to close a deal. Actually, I think that there's a huge advantage to operating as a business entity, even if you don't close a deal. Because imagine this scenario. Imagine you sign a purchase agreement and for whatever reason it goes bad and you never close. You still have entered into a contract. So who do you want to have as the party to the contract getting sued? You or an LLC? So having that LLC in place before you sign the first contract has the advantage of transferring liability risk away from you personally over to the LLC. Now, the one exception is fraud. Fraud is the ultimate trump card. And what I mean by that is you can't defraud somebody and hide behind your LLC.
Right.
But you should always do business in the name of your LLC, not you. So that means you should have the LLC in place before you start going around doing business.
I like that.
You know what I love about that explanation, Jason, is we get asked that question all the time, and we're not attorneys, so we can't answer. We just kind of say what we say, like, hey, this is what we're doing. You should talk to our attorney, Matt, because Matt has this magical way of explaining it so simply that it's easy to understand. Like, should I get an LLC? Well, if you're planning on doing something, yes.
What I always say is, and I said this to a woman, I had a consultation just yesterday, and she had a similar question, not exactly. And I said to her, if you're going to do business, then be a business. And if you're not going to do business, then it's called a hobby. So don't engage with other people if you're going to just have a hobby.
Yeah, I agree with you on that one. That's good. That's good. Let's see if any questions came in. Not sure what to say. Oh, so not sure what to say. I have a Nevada corporation, and I believe they're in.
They're in Little Rock. That was
yeah, Little Rock. So yeah.
Sorry, Jason.
Let's see here.
Fix it. Well, let's address Jason's problem.
Okay.
Jason, go to, I forget where he was.
Little Rock, Arkansas.
Okay. So Jason, get in touch with a lawyer in Arkansas, you said?
Yep.
Go find a lawyer in Arkansas and get your Nevada entity transferred over to Arkansas. And then forget that you ever subjected yourself to Nevada law. Just get it fixed. And a good place to find a lawyer is your local RIA, because most RIAs have somebody like me who's been in real estate. I've been doing this for 30 years. Yeah, that's why I look so old. But find somebody in Arkansas that knows what they're doing, preferably an investor who practices law, right? That's always nice to have somebody who's actually done it before and experienced the pain of real estate investing. And the joy, right? I sold a house this week, so that was cool.
That is good.
Yeah.
So Jason, Janice, I'm not sure who it is. I know you said Janice Phillips, so either Jason or Janice. Hopefully that information is helpful. Drop a comment below if you found that helpful. This is a good question right here too. Can I use my flooring installation LLC to enter into my first deal? Sure, if you want your flooring installation LLC to get sued for your real estate deals. Makes sense.
Another great way.
So think of it this way. So your flooring business is an egg that you're putting into this basket, right? Or the assets associated with your flooring business. Okay, it's an egg, and now you want to put more eggs in the same basket. That's cool until the basket tips over, and then all your eggs break. So one solution is if you're doing many deals, if you own lots of real estate, then do a Series Llc. So you have one LLC, and it has multiple business enterprises. Each enterprise is called a series. So I have one. I have a Series LLC, and you could have a Series LLC that does flooring and a separate series that does 123 Elm Street and another one that does 5678 Oak Street, and on and on and on, multiple addresses. So you could use series to do, each series could do a separate real estate transaction or different businesses.
That's great. Great feedback on that one. This question came in from Nick from Indianapolis. You're gonna you're gonna like this one, Matt. A lot of gurus say open LLCs in other states to gain both inside and outside protection. Is this even fully possible when you create an LLC, and can you do that in Indiana?
No, inside outside protection, that concept has to do with okay, so think of asset protection in two ways. You have to protect the stuff you have personally, like your stuff, right? So you got cars and bank accounts and a house and income and stuff, right? Right, cars, trucks, whatever you have, snowmobiles, boats, you have stuff. So you want to protect that stuff from business risk, but you also want to protect the assets held by the LLC, because the LLC has stuff. The LLC has income, contracts, real estate, equipment, tools, whatever it has, whatever you put in your LLC. So you want to protect the LLC and its stuff, but you also want to protect your stuff. And ironically, the LLC kind of protects your personal stuff. That's one of the tools of protecting your personal stuff. Going to another state doesn't further that interest at all. In terms of protecting your personal stuff, the main way you do it is to separate your business life from your personal life. So you put your business life with the business risk and the business income and the business assets in a limited liability entity. And think about it. LLC, what's that stand for? Limited Liability Company, LLC, right? Corporation similarly is a limited liability entity. So by the very name of the entity, it tells you that it is a mechanism to limit your personal liability, right? We didn't call it Get Your Ass Sued Company. No, that's not the name of it. It's called Limited Liability Company, not Get Your Ass Sued Company. It's Limited Liability Company. There's a reason for that name. And so use an LLC and use insurance. So call your insurance agent and get liability insurance, and then do smart things, right? That's how you protect your personal assets. Do smart things. If you're married, make sure your house is in your name and your spouse's name. Well, if you live in a state that has husband and wife property, it's called estates by the entireties. There's a whole bunch of things you can do to protect your personal assets. Sign contracts, only use the LLC, know how to use the LLC. I mean, it's not just having an LLC, but you got to use it properly, right?
Yep.
You can't run around and do business in your personal name and then later go, oh, but wait, I have an LLC. Well, you didn't do business in your LLC. You did business in your personal name. So now you're personally liable. So which is it? Are you doing business as an LLC or a person? If you're doing business as a person, then you're going to get personally sued. In terms of protecting the LLC and the stuff the LLC owns, you do similar things. You have good contracts. You call your accountant, your lawyer, and your insurance agent early, not after a problem arises, but before a problem arises. You avoid troublemakers. Don't do business with troublemakers. If you are a landlord, you research, or I should say, inspect your properties on a regular basis. You do good tenant screening. There's just a bunch of things you do to protect the entity itself. And then you do other things to protect yourself from business risks. But going to multiple states isn't going to help you. That just makes it worse.
Right. Yeah, no, for sure.
I was wearing this shirt today, Jason, that said, bad choices make good stories. Because I remember Matt had told a few of those stories when he was talking about people that came after the fact, or they were doing business in their name rather than their entity. And then things hit the fan, and Yeah, I mean, I don't want to tell your stories, man. I'm just saying.
Yeah,
that's
no,
my
you're
word.
right. It's called so oftentimes when things go bad, people I get this question probably at least 6-7 times a year. Okay, well, the shit hit the fan. Can I just transfer all this stuff into an LLC, or can I give it to my brother-in-law, you know, and then he'll give it back later after the smoke clears? No, you may not. That's called a fraudulent conveyance, a fraudulent transfer. When you're transferring assets away from yourself to somebody else or something else as a way to ride out the storm to prevent your creditors from getting it. It's a fraudulent conveyance.
Yeah, that's no good. No bueno.
No bueno.
Here we go. We've got a question from Brandon. What is the best corporate entity to use for wholesaling?
Well, I haven't formed a corporation in probably 15 years, maybe 20 years, long time. I form almost exclusively LLCs, except for nonprofits. Nonprofits in Indiana, we don't have a nonprofit LLC. So you have to form a corporation if you're going to form a nonprofit, like a charity, right? But if you're doing a for-profit business, I form nothing but LLCs now. And then I decide two big questions. One is, how am I going to structure it for corporate governance purposes? So I can structure an LLC as a sole proprietorship. I can structure it as a partnership. I can structure it as a corporation. I mean, I have a lot of flexibility how I structure it. Then the second question is, how am I going to treat it for tax purposes? And for tax purposes, I also have a lot of choices with an LLC. I can structure it as a sole proprietorship. I can structure it as a C-Corp, an S-Corp, or a partnership. So there's a lot of flexibility with the LLC. I always form LLCs, always form them. And then I decide how I want the entity treated. Now, with regard to wholesaling, this gets a little hairy, but there's a rule of tax law that says if you're selling inventory, which could be a house, then that inventory is going to be treated as such. It's not going to be treated as an investment. Typically, when you're wholesaling, you're not buying real estate or entering into deals for the purpose of investment. Investment is a passive activity. That's what, in theory, landlords do, right? They buy a property, they hold it. Maybe they manage it themselves. Maybe they have a property manager. But the theory is that it's generating income because you have tenants and appreciation, right? It's a passive activity.
Yep.
But if you're selling shower curtain rods, that's not an investment. That's called inventory. So the IRS, if you do deal after deal after deal after deal, you're flipping deals or flipping properties and you're doing a volume of them, the IRS is going to say, man, you're selling shower curtain rods. We're going to treat that as inventory subject to full taxation. That's your job. So you're not going to get capital gains tax treatment. You're going to get full-blown earned income tax treatment. So a lot of investors will work with a tax advisor, and they'll form an LLC taxed as an S corporation, and then they'll play what I call the dividend game, where they pay themselves a little bit of salary and a little bit of distribution of profits, and they try to avoid some of the income taxes. That's really the Social Security and Medicare taxes. That is a complicated game to play because the IRS wants its money. Right. So you really need to work with a knowledgeable tax advisor if you're going to do that thing. And I also think it's really hard to play that game if you don't have any employees or independent contractors helping you earn income. Pigs get fat, hogs get slaughtered. Meaning, yeah, in tax law, what that means is if you are very greedy, then you're going to get, you're more likely to get audited for tax purposes. And tax audit comes in two forms. What are the chances I'm going to get audited? What are the chances I'm going to survive the audit? Right. So you don't want to increase your chances of getting audited, and you certainly don't want to fail an audit. So you got to work with a tax advisor who knows what he's doing. This is a tricky area of law, especially for wholesalers.
Yep, for sure. No, I hear you. We had a really good question, and we get this question a lot when you come and speak at our seminars. So here's this question from Sharon. What's your opinion about creating a trust on a property that you purchase, let's just say 123 Main Street, trust, and list your LLC as the owner?
Okay. This is the classic, let's hide things from banks and other people through the use of a land trust, and we'll disguise it as a living trust. I'm not a big fan of trusts. I have a situation right now where a client has a land trust and we're out looking for the trustee. I have two cases right now. I have another one where we have a title issue and we're trying to figure out how the heck are we going to transfer this property, because no one knows who controls the trustee, and the deeds were not done well, and it's just a big mess. This scheme was created years ago as an effort to transfer property and avoid the due on sale clause in a mortgage. So let me give you the scenario. So let's say that I own a property, right? And Jason, I'm gonna sell the property to you, but I got a mortgage on my property. And if I sell that property or give you an interest in the property, I trigger the due on sale clause, meaning my mortgage lender can foreclose on the property. And I don't want to do that. So I'm going to trick the bank. So here's how I'm going to trick the bank. What I'm going to do is I'm going to create a trust. It's going to be a land trust, but I'm going to disguise it to look like an estate planning trust, a living trust. And then I'm going to sign the beneficial interest of the trust over to you. But I'm going to make Michael the trustee because I got to make it look like a legitimate third-party trust. Okay. But then what happens is Michael moves to Seattle and the deed is in Michael's name. So now I got to track Michael down. I got to hire a private investigator to go chase him, you know, and he's in wherever, right? Or worst case scenario, I can't find him or he dies. Then what do I do? Right. And I've had scenarios. I've had land trustees die. So there's a federal statute called the Garn-St-Germain Financial Institutions Act. And basically it says banks can't foreclose under the due on sale clause if someone transfers their house into an estate planning tool like a living trust. So what people were doing is they were using land trusts and they were pretending that they were living trusts for estate planning purposes. It's complete fraud. There was a lawyer in Ohio for the longest time. I mean, she sold tons and tons of 3-ring binders with legal forms, with trust documents and LLC documents. And it's a scheme, and it's not an appropriate way to hold title to real estate. It's just the wrong way to do it. It's a fraud. It's a fraud. If there's a mortgage involved, it's a fraud on the mortgage lender. It's just flat out fraud. You're just trying to trick the bank.
Yeah, that's not good. No fraud. No fraud.
No bueno.
No bueno. Here's a good one from the Note Pro team. Years ago, I was advised on several levels to use an S-Corp for active business, but hold in LLCs. And there was another follow-up. Is that no longer the case?
Well, that goes to the question that we addressed earlier, that if you're buying and selling lots of properties, you don't want to treat them, you're trying to lower your taxes and you're really trying to avoid Social Security and Medicare tax by making it look like a passive activity. And that's really hard to do, frankly, because the IRS has the ability to reach back behind the paperwork and see what's really going on. Okay. They sometimes refer to that as the tracing rules, where you trace back a transaction and try to determine what the real nature of the transaction is. Let me tell a quick story. So I helped some guys, 3 of us started a law firm in the early 90s, 1993, 1994. And by 2010, I was tired of having partners and quit my firm, and I started over. I hired an employee in the first week. I mean, I had a pretty big book of business and I needed people right away. But let's pretend that I didn't hire anybody for the first year. So for the first year, it was just me, a printer and a computer and a telephone, and I'm practicing law. That meant for the first year, 100% of the income generated by my business, by my LLC, was the product of sweat from my brow, right? It was all me. Well, that's 100% subject to Social Security and Medicare taxes. That's that 15.3%, which is divided into half. The employer pays half, 7.65, and the employee pays half, 7.65, right? That's the tax we try to avoid if we can. So But I can't avoid that tax if I'm the only guy making the income. Everything I make is subject to that tax when I'm the only guy. But let's suppose that in year 2, I hire employees. I hire two people and they start helping me generate income. Ooh, that's called profit. I don't have to pay Social Security taxes and Medicare taxes on profit. So at that point, I would divide my take home pay, if you will, into 2 bundles. One is a salary or wage, fully taxed. So I'm going to pay income tax, I'm going to pay Medicare tax, and I'm going to pay Social Security tax on that part. That's just like if Eli Lilly or Amazon or anybody hired you, you're working for somebody else, right? Half of that's going to be paid by the employer, half by the employee. Same thing if you're self-employed. Self-employment tax, 15.3%. But on the other portion of my take-home pay, my profits, I only have to pay income tax. I don't have to pay the Social Security tax. So I'm saving 15.3%. And that adds up big time. That adds up really fast. I mean, think about it. You save $4,000 here and $4,000 the next year and the year after and the year after. I mean, it's amazing how much Social Security and Medicare taxes we pay over our lifetime. A lot. We pay a lot. If you're making any kind of money, you're paying a lot of taxes. So if you can save $3,000, $4,000, $5,000 a year, you can do it. Now, if you're doing passive, so basically I just described active businesses, right? Like a law firm. But if you're doing passive investing, it doesn't really matter whether you're an LLC or an S-Corp, because passive income is passive income. My net income from a rental property is passive income. So I'm not going to be subject to those Social Security taxes. So if you're landlording, it doesn't really matter in the income tax, from a Social Security Medicare tax perspective, it doesn't matter whether you're an S-Corp or an LLC. But here's where it makes a difference, a big difference. Let's say that I'm landlording and I have 3 properties, and then I have 4 properties, and then I have 5 properties, and all of a sudden I watch a video, no flipping excuses video, and I say, oh my God, I have too much equity. I have too much at risk in one LLC. I better divide and conquer. Divide and conquer means you divide up your properties and into 2 or 3 bundles. So you go form 2 more LLCs and you take your properties and you spread them around. If you used an LLC to hold your initial real estate properties, your passive income properties, you can transfer from one LLC to another tax-free. If you formed a corporation and you start moving your properties around from one LLC to another, taxable. It's a taxable transaction. So again, another reason to form LLCs and not corporations.
That's a great response. Here's another one that kind of came in offline. Should I place LLCs on different properties I own as rentals?
I think the question means, should I have like 1 property per LLC?
Yes.
Or I guess you could also interpret this question as, should I have 2 LLCs for 1 property, which is something I've never done. That's, to me, sounds like a giant headache. Can you imagine you own 2 LLCs and you're trying to run 1 property with 2 LLCs?
Oh man.
I've never done that. I've never even thought of that until this question after 30 years. I would never do that. That just sounds like a nightmare.
No, but I know we go over this when you're at the seminars. Like, people always ask us, let's put the scenario out. I own 8 properties. Should I have 8 separate LLCs?
So if you're in a state that allows the Series LLC, that's a no-brainer. No-brainer. Form a Series LLC. 1 LLC, multiple series. You can file 1 tax return, consolidate all your operations. You just have to have really good bookkeeping and really good accounting.
Perfect. And that brings us to, I think, and I didn't forget about you, Brandon, but here's his question. He said, could you explain the Series LLC a little bit more in depth?
So, Jason, flash my, on this video, if you could, put a link to indiebizlaw.com, which is my law firm website. And indiebizlaw.com, thank you. And there is an article, if you go to the upper right-hand corner of indiebizlaw.com, there's a search bar, it looks like a little magnifying glass, and type in the word series. And I've written a long article about the Series LLC for real estate investors. I formed the first Series LLC in Indiana. I was the very first one. In fact, the Indiana Secretary of State didn't even have the form. So the form they used for a while was my form. I had to write a form for them because they didn't know how to form one. I think you were eligible to form one on Monday, and I did it at like 10 o'clock in the morning, just to figure it out. That is an awesome tool, the Series LLC. It's a natural progression of the movement to simplify organizing a business. And it really is the perfect setup for somebody, especially a landlord who's going to have multiple properties. I have one client who has over 30 series. He does commercial properties. He has over 30 commercial buildings. So we form a series, and my secretary can do it like that. We do so many of them. She can form a series in 15, 20 minutes to an existing Series LLC. So she forms a series, and this goes back to the very first question. She forms a series. We get a call from the client saying, "Hey, we're gonna make an offer on this building," and my secretary immediately forms a series, and then we sign the purchase agreement in the name of that series.
Wow, that's awesome.
And then then we're set up, and then that series is isolated from any other series. So the liability, if you do it properly, you have to set up the LLC properly, and there's some things that are hidden in the statute that aren't exposed in the Secretary of State's form. So you really need to consult with a lawyer who knows what he's doing. But if you form it properly and operate it properly, each one of your properties is isolated from the other in terms of risk. And then you have the benefit of being an LLC, and you can even reclassify one or more of the series to be an S-Corp if for some reason you wanted it to be an Escort. So it's an awesome tool. It's an awesome tool.
No, that's,
yeah.
I like that.
Where again do they send the check for that little gem?
Yeah, there's a little donation thing on my law firm website, and you just feel free to go to PayPal and send a check.
Make sure you send them a little thank you gift.
Yeah, absolutely. We had this one coming from I believe it's Cyro. Do you and I think what's being asked here, do part-time VAs count for not paying tax on profit? So that's a great question.
So okay, so what is part-time VAs?
So if you have part-time virtual assistants, maybe they're helping do phone calls, maybe they're helping doing data entry, maybe they're helping getting purchase and sales agreements out, but they're helping you in a way to increase profit within your company.
So most VAs are overseas.
Yes.
Right. Okay.
Yep.
If you structure the relationship properly, they're an independent contractor.
Yes.
But the thing with the threshold question is, how much control do you have over the VA? If you tell them how they have to perform their job, they're an employee. If you give them the tools to do the job, they're an employee. But think about this. When you hire a plumber to come to make a repair at your house, they don't become your employee. You don't provide them tools. You don't provide them a truck. You don't tell him how to take the toilet off and replace the beehive or whatever it's called, the wax ring. I mean, you're not telling them how to do it, right?
Right.
Michael laughing because
you called the wax ring a beehive, yes.
Right. And I'm a plumber. That's what I call a plumber when the toilet will flush. So it's all about control. The more control you have over them, the more likely they're going to be classified as an employee. So you can give them performance standards. You can say, well, you got to comply. Like for a plumber, you can say to the plumber, you plumber have to comply with industry standards. You got to comply with the local building code. You can do that, but you can't tell them how to tighten down the toilet or how to replace a plumbing fixture. If you are instructing them or providing the tools and equipment and so forth, then they're an employee.
Gotcha. You teach them how to install the beehive, right?
Yeah.
No,
What's it called? Does anyone know what it's called? The
I think
wax
it's the
ring?
wax ring. I think you had it right the second time.
That's hilarious. So we had some questions come in here.
Beehive is a hair thing, right?
There you go. Now you're getting closer.
So No Protein asked, does the S-Corp offer more protection and deductions than the LLC?
No, it doesn't. What the S-Corp allows you to do is to do what I described earlier. I call it playing the dividend game or the distribution game, where you can classify some of your income as profit and the rest is fully taxed as earned income, subject to Social Security and Medicare taxes. But if you go buy a printer at Office Depot, that printer is deductible under 179 of the tax code. It's deductible as a trade or business expense, and it doesn't matter whether you buy it personally. You're, heaven forbid, you're a sole proprietor. It doesn't matter whether that printer is purchased. If it's purchased for business purposes, it's a business deduction, and it doesn't matter whether you're an LLC, a C-Corp, or an S-Corp. That printer is still deductible. It's a business expense. The only place really where the S corporation comes into play, the S corporation allows you to play that dividend game, the distribution game. You can't do that in an LLC. In an LLC, you're fully taxed as earned income. Okay, but remember, the S corporation has built-in tax savings over the C corp. Every corporation that's formed is a C corp until you take the S election, and you make it an S corp by taking the S election. The S corp, there's a trade-off. The trade-off is you have to pay taxes on your profits in an S corp, even if you don't distribute them from the company to you, but you don't get double taxed like the C corp. The C corp, the taxes are paid at two levels. The corporation pays taxes, and then the shareholders, when they get their money, they pay taxes. That's that double taxation that we try to avoid by forming S corporation.
Gotcha. That makes sense. Great question. We got some good ones coming in here. Ciro. Sorry
about the wax ring.
Yeah.
Also, AKA Beehive.
Right. Yeah. Maybe you could come out with the first Beehive wax ring.
I'm going to trademark it.
There you go. There you go. Matt Griffith's Beehive ring.
So we have to come in from REI Trainer. What type of LLC allows you to transfer properties tax-free? Do you have to identify as an S-Corp instead of C-Corp for tax purposes? I think you kind of just alluded to it just a moment ago.
Yeah. To answer that second question, the way you turn a C corporation into an S corporation is to timely file Form 2553 with the IRS. And the general rule is that you need to, here's what I say. Send in your 2553 within 30 days after you form your company or prior to January 1st of each tax year. And then your C Corp becomes an S Corp. You really need to make this decision as to what your strategy is going to be when you form the entity. So you need to have a discussion with your tax advisor or your lawyer, your business lawyer who's helping you with your asset protection plan. You need to do that in the beginning. Have a plan. Just have a plan. You just can't stumble into it. You have to have a plan. And that starts with a discussion with somebody who knows what they're doing. Yeah. What was the first part of the question?
Do you see it? What type of LLC allows you to transfer properties tax-free?
Well, I think if this question goes to, I think we alluded to this earlier. If I have 5 properties and all of a sudden I get uncomfortable with the amount of equity I have, in other words, I got too many eggs in one basket, and if the basket's the LLC. If the basket tips over, I lose all my eggs. That's no bueno. So what I want to do is I want to have 2 baskets or 3 baskets or 4 baskets, right? And then I put 1 egg, each egg representing a property, in a separate basket. If I formed an LLC, I can transfer back and forth, tax-free. There's no sales, there's no transaction tax. But if I'm a corporation, C or S, and I transfer, let me tell you where this comes in. This comes into play where I buy a property and then I got a lot of equity in it, and I want to suck some equity out. I want to strip some equity so I can go buy another property, right? So I'm going to go get a mortgage, and the bank says, oh, you know what, Michael, I can't. You're gonna have to transfer this property into your name, because the bank, the credit union here, we don't lend to LLCs. We only lend to individuals. So Michael, if you transfer the property from your LLC to you, we'll make you a loan. You're like, great. Okay. So Michael he does a warranty deed, not a quick claim deed. He does a warranty deed from Michael to from his LLC to him. He gets the loan, and then don't tell the bank, but then after the loan closes, he's going to transfer it back by warranty deed to his LLC. Those transfers from Michael from LLC to Michael back to LLC, no tax. Corporation, tax.
Gotcha. Good stuff.
Another money saving tip.
Note Pro Team was asking, with the Series LLC, is a separate bank checking account required for each sub entity? Just one.
Uno. Yep.
Okay.
But the key is you must have really good record keeping, because you have to, if you look at the statute says you have to account for the money for each series. So when you go to Lowe's and buy a bucket of paint, you better stick that in the bank records for that series, or I should say the accounting records. So having good control over QuickBooks or whatever accounting software you use, that's critical if you're going to use the Series LLC. It's all about accounting.
Yep. Cool. Great answer. Great question. Brandon asked, is the Series LLC a good wholesale tool? What states allow Series LLCs?
I don't have the list. I will tell you that they're well, I studied the heck out of this statute when Indiana was forming it. They've actually had it in other states for a long time. At the time, there were about a dozen, and that number I've heard is growing. I think it's a matter of time. Every state will have it. Every state's going to offer it. Just like the LLC, it took several years for each state to adopt a statute. I don't have the current list. I'm not sure which one. So I'd encourage Brandon to investigate. Indiana has it. I know some other states have it. Well, there's over a dozen, but it's an awesome tool, because you can have one bank account, good accounting. You can put multiple properties in essentially one entity. They're all in separate series. You could wholesale. You could do anything. You could start a restaurant in one series. I mean, think about this. You could have 5 series, and one series owns a Mexican restaurant, and the other owns an Italian restaurant, and the other owns a plumbing company, and the other owns a piece of real estate, and the other does wholesaling. I have a wholesaler, you guys probably know him, up in northern Indiana that has a series, and he does a huge volume. He has 3 series in his Series LLC, and he rotates deals in those 3. So he has 3 baskets. He might have 10 eggs in each basket, but he has 3 baskets. So if one of those baskets tips over, he's got the other 2.
Gotcha. Here we go. We got this question coming in, and your face is a little blocked for just a second, but I'll unblock it in just a moment. How does equity? There we go. How does equity stripping work? Is it a legitimate technique for asset protection? What are the advantages and drawbacks to this technique? I got on a little late. I apologized if you cover this. I don't think we did cover this.
No. This is a great question.
He's back.
Okay, so I'm going to give a personal example. I have my home is owned with my wife. Indiana. I live in Indiana. So I have a states by the entireties protection in Indiana, which is husband and wife owned property. And so I have a special form of asset protection for my own personal residence, but I have a lot of equity in it. So I went and got a big line of credit just to strip equity out of it. And then I go do real estate deals with that. I have, well, the place I'm sitting in right now, this is about a $550,000 condo townhouse in Florida. I went and got a big loan on it just to strip equity out of it. And then I took that equity and I went and bought more property. So by doing so, by stripping equity out, I have less in there at risk. Okay.
Makes sense.
And by having a mortgage on the property, that mortgage is going to be in front of any, if I were to get sued and got a judgment against me, that mortgage is going to be in front of the judgment. So essentially, I make it less likely for someone to sue me and go after that property because there's less there for them to get. And at a sheriff's sale, they would have to show up. So like on this place, I went and stripped, I think I went and like stripped 330 grand out of this place. I didn't need the money, but I'm going to make it work. I mean, why have all that equity sit there doing nothing? So I stripped 330 grand out of this place, went and bought something else. And in the process, if I were to get sued, got a judgment against me, well, they'd have to jump through a lot of hurdles because I have an LLC, I have a series. But if they could get through all those hurdles, they would have to come to the sheriff's sale with $330,000 to get the first dollar. They'd have to pay off the first mortgage.
Wow. Yeah.
So that's equity stripping. It's an awesome technique. You have to be able to weather pandemics when cash flow is hurt, right? That's the problem with debt is you got to pay your mortgage.
Yep.
So when there are hiccups, you have to have the income or the resources to make debt service payments when things go bad or things slow down. That's the only problem with debt, right? So I'm not a, there's some national gurus, like Dave Ramsey, who think debt is like poison. Like if you go get a credit card, you might as well throw yourself in front of a bus. But his whole spiel is he's selling this 5-step program or 7-step program, whatever. So he has to keep drinking the Kool-Aid because otherwise he can't sell his books and tapes. So he can't deviate from that. Debt is evil, right? So he just has to stick on that mantra over and over and over. I think that's foolish. I think debt serves many wonderful purposes if done responsibly.
Yep.
It's called leverage, and we call it leverage for a reason. Why would I have, I have a lot of equity, right? I've been practicing law for 30 years and I've done well and I've accumulated some wealth. Why would I let that just sit there doing nothing?
Right.
How stupid, right?
Yes.
It's dumb. It's really, really dumb for me to just have equity sitting there. I got $1 million of just in 2 properties. I got $1 million of equity sitting there. Why would I just let it sit there and do nothing? In theory, you have appreciation, but there's a lot of cash there. Suck it out. Go buy something else. Make more wealth with it. It doesn't make any sense.
Right. There is gem number 3. Again, donations at any Buzz Law. There's a PayPal button, I guess. Matt's accepting all kinds.
I got to get that installed today. I might make some money today.
I like Dave's thing where he says, you should always say when somebody asks you, how are you? You should say better than I deserve. And I'm just like, why in the hell would you say that? Like, you don't feel like you deserve, you don't feel like you deserve where to be right now. It's just like, I've never gotten, I hear he's mainly trying to help folks out that, have like a regular 9-to-5 job and all that type of stuff. But I agree with you. Like if you've got equity just sitting there, use it. And if you use it responsibly, you go get, some assets that could be paying you on a monthly basis. It just doesn't,
that guy's worth millions and millions of dollars now, right? Yeah. You don't think that he's got debt?
Oh yeah.
Oh, I'm sure he does.
You see the house he lives in? It's freaking crazy.
I guarantee you he's got some debt somewhere.
I think he speaks to a little bit of an older crowd though, because I know my dad reads some of his stuff, and Jason, you and I were talking about previous generations and mindsets and how they were doing things. And my dad's like, "Oh yeah, he sends me articles every once in a while. What do you think of this about Dave Ramsey? What do you think about that?" And I'm like, "Yeah, it's interesting. You know, I try not to hurt his feelings about it. It's he enjoys it, but at the
Well,
same time, I think."
so
Huh?
Michael, to that point, I've over the years I've talked to a lot of people who, I mean, most of them are gone now, but you know, they'd be in their 90s plus, who went through the Depression, the Great Depression, and that had a permanent impact on their psyche and how they view debt and savings. And there was a smaller version of that with millennials. So for a long time, we couldn't get millennials to buy real estate. And that's slowly changing because they're tired of living in an apartment or their parents' basement. Right. And that's right. And that's slowly changing. And it is, you're now seeing millennials buy real estate.
Yeah.
They also have, ironically, huge savings, which is just bizarre to me how much savings they have. They have cash. They also have a ton of student debt.
Yeah.
You know, right. They have a ton of student debt, but they're sitting on, I saw some statistics like $40,000-$50,000 on average. It was just a mind boggling number that they're sitting on that kind of savings with debt. It's like, pay the debt off, you know, because that's not deductible interest. Well, I guess a certain degree of it is, but not all of them. It's just crazy to me. Well, they're hoping Bernie Sanders would pay off their debt. That didn't work out.
There we go.
Yeah, that really didn't.
But, you know, I wonder whether this pandemic, the COVID-19 deal, I wonder if that's going to have a similar impact on people, and we're going to see another slowing down of real estate purchases.
Yeah.
And I wonder also whether we're going to see millennials who went through the Great Recession, and they're going to say, well, I was right the first time. Debt is evil. I shouldn't have bought this house, because they've experienced twice in their lifetime something really phenomenal. I mean, it's pretty incredible that we've been through this. I mean, think about it. Since 9/11, we have had 4 dips in the real estate market since 9/11.
Yeah.
That's amazing. We haven't had 4 dips like that in 100 years. And we've had that many in the past 19 years.
Yeah.
So you have to think that that's going to impact millennials. They've experienced 3 of the 4.
Well, let me ask you this. It's not on topic with what we're going over today, but I'd like to get your take on it. I believe I think the stats came out the other day. Over 3.2 million homeowners did the whole mortgage forbearance thing. And a lot of folks aren't aware that these banks are doing a big balloon that you have to pay off within a certain period of time. And one of the options is just sign the house back to us by doing a deed in lieu. Do you see that potentially causing a similar reaction back in 08 with short sales and stuff?
Yeah, I told the attorney in my office that handles our eviction work, I told him, I said, get plenty of rest during the stay-at-home period, because you're going to be swamped. And I've talked to a couple other lawyer friends of mine who have thought about hiring a young associate who has an interest in bankruptcy law, because I think bankruptcy filings are going to be big. And I think there's going to be a lot of litigation involving real estate, a lot of commercial eviction work. There'll be a lot of workouts with banks. I think that lawyers are going to be busy for the next 12 to 18 months figuring all this out. But I will tell you that banks, commercial banks, except the really, really dumb ones, they don't want to foreclose on property owners, commercial property owners, because they don't want all that restaurant equipment. They don't want all those barber chairs and nail salon, all that stuff. They don't want that stuff back. If they foreclose and they get all that, what are you going to do with a restaurant equipment over the next 12 to 18 months? If you want to start a restaurant, start one in about 3 to 6 months, because they'll give you a whole kitchen for free. You're going to be able to buy all of the freezers, walk-in refrigerators, tables, chairs, silverware, all of that stuff is going to be dirt cheap because so many restaurants are going to go down. And I've seen it before. I can't imagine it's not going to happen again with COVID.
Yeah,
I agree. There's already been some restaurants in Noblesville on the square that have already said, "Hey, we're done."
I think we'll lose about 25%. And I don't think banks want to foreclose and take that stuff, even though they have UCC liens on that. And landlords don't want it either. They don't want, because the market for that stuff is going to be, I mean, it's going to be in the basement. It's going to be so cheap to buy all kinds of tools and equipment. Tools and equipment are going to be really, so on the one hand, that's very negative and bad. But on the other hand, it's very positive in the sense that if you want to start one of those businesses, now is a great time to do so, because you'll be able to enter the point of entry, the level of entry, cost of entry it's going to be really low. It's going to be really low. So it'll be a good time to start a business.
Yeah, no, I agree. And I know we went off topic with that question, but do you have time for 2 more questions?
Sure. Go for it.
This one's going to probably cover up your face again. I'm just giving you the heads up. You're there, Matt. So Nick was asking, for those who cannot put 20% down on a rental, is a personal FHA loan for a property where you live in one of the units problematic since the loan is under your name and not an LLC?
I don't know that you can do that deal. I don't think that you probably need to talk to a mortgage broker. I don't know that they'll let you do that deal. I don't think living in the same place in and of itself disqualifies you, but lenders are looking for some cash down.
Yeah, and you don't necessarily need the 20%, Nick. You could probably go to like a local bank. They're doing deals to where you don't need 20% down.
Yeah, that's right. 20% is a pretty healthy down even on a rental.
It is. And I know one of the big Finance of America, they're not doing any loans right now until things get reopened. But those local mom and pop banks, that don't have, a
credit unions,
are
credit sometimes great places.
Yeah, I would go to those places instead of going to like a big box place like Bank of America or Chase. Chase is the one that came out with that news about the 20% down and 700 plus FICO scores. And I know Wells Fargo just came out with, they're
no longer offering lines of credit. Yeah.
So yeah, let's see here. We've got,
the other thing to Nick's question is, and we alluded to this earlier, you can buy the property in your name and transfer it.
He said
don't tell the bank, right? And transfer it later. Now, technically you got a due on sale clause problem, but my experience is that if you continue to timely make your mortgage payments and you get everybody insured, you, the LLC, and the bank never finds out about the transfer back. So you have the protection of the LLC, and as long as you're making your payments and the property's insured, banks don't foreclose. They don't call notes. They don't even find out about it.
Right. And Nick was saying it's a duplex. So in all honesty, Nick, I think you could get a better deal through like a local bank. And I know you're here in Indy, so great bank, Horizon Trust, First Merchants Bank, Lake City Bank. Those are small mom pop banks. Bank of Indianapolis is a great bank. Call those places. Those places will probably be able to give you a better run. And Bank of Indianapolis is more than likely going to want your business as far as like checking, savings, all that type of stuff. And they'll give you better terms as well.
Yeah, and also on that property, he could actually do a party wall agreement and split that property and have 2 separate legal descriptions.
Yep, there you go. There you go, Nick. So hopefully that helps. He said, yeah, appreciate the advice. Cool. Marie said, I'm Canadian, not familiar with U.S. laws. Can you please tell me what legal entity should be used if you're simply assigning a contract and not actually purchasing or flipping?
Any entity. You can do an LLC. I don't know how she's going to be treated for tax purposes. I'm not a Canadian lawyer, so I don't know how her taxes are going to be handled. But it doesn't matter if she's flipping deals, if she's doing assignments. The nature of the transaction is going to determine the tax treatment, not whether she's an LLC or an S-Corp. Oh, and Can't be, wait a minute, she can't be an S-Corp because she's not a U.S. citizen or a permanent alien resident. Because
Gotcha.
she's Canadian, because she's Canadian, I'm assuming she's not a U.S. citizen or permanent alien resident, which means she can't be an S-Corp. That's one of the requirements of an S-Corp. You can't have more than 100 shareholders, and you have to be a U.S. citizen or permanent alien resident.
Makes sense.
So she's not going to be an S-Corp. She can't. She won't qualify.
Okay.
And then she can make the mistake of being the C-Corp and pay double taxes, which would be really bad. So she should just stick with the LLC.
I'm going to sneak one last one in here for you. Do you see residential property prices dropping in 3 to 6 months, similar to commercial?
Yeah. I think they'll drop, and then I think they'll come back. And if you look at a long-term trend of real estate values, it's amazing how often how prices come back and they make up the losses. I mean, if you chart out real estate is I can't say it's steady, because you do have giant increases and dips, and it's also very local, right? So in Indiana, real estate just, it's that trajectory, right? Over and over this way, right?
Yeah.
Right. But like this area where I am in Florida, my dog is trying to say hi. Can you see her?
No.
Yeah, we took our dog down here. Look, you see her.
Nice.
Nice.
But where I am, we've seen amazing appreciation over the past several years, and they're running out of land here. So all the value, some of the properties around me sell for $1,000 a square foot. I mean, those are getting to be like Manhattan prices, right?
Yeah.
$1,000 a square foot. So every market is different. You're going to see different appreciation. You're going to see different, prices per square foot in different areas of the country. But overall, it's amazing how well real estate holds up in the long term. But you're going to see, well, I've seen this in my 30 years practicing law. I've seen several dips in real estate prices, and they bounce back every time. But it just takes a while. It depends on the circumstances.
Yep.
I mean, we had the ABC credit problem back in the 90s. I don't know if you're around or you remember that, but we had C credit went back. This is the early 90s, like 94, 93, 94. C credit went bad. Then B credit started to get impacted. So then they started reclassifying. They said, "Oh, that's not B credit, that's B plus." And they said, then it became B plus plus, and they started recharacterizing the debt, trying to save it, right? And that was a mini credit problem we had. Then we had the mortgage foreclosure crisis, which was huge and highly predictable. And why was that predictable? It was predictable because banks, under pressure from Congress and Freddie and Fannie, were giving anybody with a heartbeat a loan. And I remember going to RIA meetings, and I would talk to some guy that just started real estate investing, and I would ask, "Hey, how many properties do you own?" "Oh, I don't have any yet." And then flash forward 6 months, and I'd say, "Hey, how's it going, Bob?" "Oh, it's going great. I started doing deals." Like, "Oh, really? So you got your first deal?" And he goes, "Yeah, I got 10 properties." Like, "Wow, you got 10 properties? Huh? So where'd you get your equity?" "Oh, I don't have any equity. I got stated income, baby. I just walked in the bank and they asked me, do you make $280,000 a year?" And I said, "Yes." And they gave me 10 loans. "Bob, do you know anything about landlording?" "I don't know a thing about landlording, but I got 10 landlording properties." And then, and then when there was a dip in the market, all of a sudden Bob had no equity, negative equity. His tenants weren't paying their rent. He had no cash. Gee, I wonder why that guy got in trouble. So we don't have those circumstances now. We don't have that. We don't have that. Banks have still had in the past, since the mortgage foreclosure crisis, right? Banks still have some pretty stringent lending criteria. They've loosened it up in the past couple of years for sure, but you still have to have a pulse, more than a pulse, right? To get a loan, you got to have some income. We don't have stated income. They want some down payment. This thing that we're experiencing right now, completely man-made. right? We did this. We said, let's just turn the economy off. We didn't even get out a dimmer, right? We just like turned the light off. It's like, everybody go home for 6 weeks. You don't need income. Who needs income, right? And we just shut the economy off for 6 weeks, going almost 8 weeks now, right? So that's an artificial happening. That's artificial. That's like, we've never done that before, ever.
No.
So I do see a dip in real estate prices for sure. And I just sold a property this week. I just signed a purchase agreement a couple days ago. I accepted an offer a couple days ago, and I probably took $7 grand, 10 grand less than I wanted on this house. But I did it because I had a buyer who's put in 20% down, is going to close in 30 days. Sold, right? And I locked it down. I'm going to close. I'm going to get past that one. I'm going to let the market come back up before I do my next deal. That's what I'm doing. Well, I may go buy something here. I'm going to buy something in Florida. But that's a longer term project. That's a long-term investment deal. But yeah, prices are going to come down, and guess what? A year from now, we'll all be laughing about it.
Well, they're saying the CDC director is saying that we might get a second wind of this COVID thing, possibly near fall time. So
we will, but it won't be like this.
No, I have no idea, man. But it's crazy. I don't have my crystal ball or anything, but I do see this whole mortgage forbearance thing potentially being a pretty big problem. And then once the market reopens, you guys, attorneys, you guys are going to be busy.
I think we're going to be busy. I think there's going to be a lot of there's going to be. I mean, evictions are crazy because tenants got word, oh, you don't have to pay your rent. So we got tenants who haven't paid rent for 3 months.
Oh, geez. Yeah,
so
landlords are taking a beating too. So wouldn't you think landlords possibly might be wanting to sell as well?
I think there's going to be a lot of movement in the market. I think there's going to be a lot of movement in the market. But I do think that, yeah, I think that the rate of infection is going to go back up because it's a virus. It's a coronavirus, just like the flu.
Yeah.
But I think we're going to be much better prepared for it. And I also think we're going to have a higher level of herd immunity because I think now that we're opening up restaurants and so forth, I think people are going to get infected. They'll be asymptomatic. And eventually the virus has nowhere to go. That's herd immunity or communal immunity or community immunity, right? Because we're not going to have a vaccine until earliest case, late fall. So how do you get over a virus? Well, either the virus has nowhere to go because enough people get sick, right? And you can't get reinfected, or everybody gets a flu shot. So staying at home, all we did is we just delayed the inevitable. Everybody is either going to get sick from this. The three of us might already have had it, and we were asymptomatic and we've recovered. So either we're going to get a shot or we're going to get plasma. We're going to get antibodies through plasma treatments. That's probably unlikely because that's probably unlikely because a lot of people would have to donate plasma to get that done. But
Right.
we get a shot in the arm, or we're going to get the virus.
Plus
Right?
more money in vaccines.
Yeah. So I think the market will be flooded with vaccines this winter. I think everybody will be getting a shot this winter.
Yeah.
But that's the only way you get a herd immunity is enough people get sick or people get vaccinated.
Yeah, I agree. I
think, Jason, you and I had talked about 2020 kind of being the rest of 20. I mean, it's going to be a new normal, and then 2021, maybe things will turn around and be as they were.
I think the fourth quarter will be huge growth. I think we will see huge growth in the fourth quarter.
I agree for sure. So Matt, I've been making sure people can see your contact information below. So indiebizlaw.com or indianavirtuallaw.com. And if you guys want to call Matt's office, the number is in front, 317-663-0650, or you could email him, matt@indiebizlaw.com. Matt, as usual, always amazing content from you. Any final or parting words that you have for folks that are still on with us now?
Absolutely. Buy low, sell high.
There you go.
I always tell people, see your lawyer early and often, because if you go to any professional advisor, I mean, it's not just a lawyer, it's a CPA, it's an insurance guy, it's a doctor, if you go early, ounce of prevention, pound of cure. It's always cheaper and easier for me to get you set up properly or to identify a problem that we can avoid than it is to fix it later, right? Exercise, eat well, and take your blood pressure medicine, and then you don't have to have triple bypass surgery.
Yeah.
Right. So it's, I have phone calls with people all the time for 5 minutes, 10 minutes, 15 minutes. They get a bill, I'll send them a 15-minute bill versus they make a huge mistake. I got a lady now that I'm billing a lot of money every month, thousands and thousands of dollars, because we're in a huge lawsuit. Had I known her 10 years ago, we wouldn't be in this situation. But I didn't know her then. Right. And I have that scenario over and over and over. I have one client, he's a commercial real estate investor. He calls me all the time. I talk to him twice a week. And he says, hey, I'm thinking about doing this. What do you think? And I'll say, avoid that. Go this way. Don't go left, go right. Or sometimes he calls and says, hey, what do you think? And I say, that's a great idea. Do it. Right. But when he doesn't call me, and he makes a mistake, or one of his employees makes a mistake, then I charge him thousands of dollars, and I could have had a 10-minute phone call with him. It's just a no-brainer. Just go seek professional advice.
No, I agree. Thanks a lot, dude, for coming on.
My pleasure. Good seeing you guys.
Yeah, good seeing you too. You, Mike, anything from you? Any parting words?
No, I can't follow Matt. I mean, come on. He's got the best stories, especially when he's installing beehives. It's incredible.
I'm going to get a wig next time and wear a beehive wig.
There you go.
Make sure if you guys need anything, if you have any follow-up questions with Matt, his contact information is right there. Also, too, if you enjoyed this video, make sure you give us a huge thumbs up. And if you are brand new to the channel, welcome. Make sure you become a subscriber so that you can get notifications of when we have new videos come out. It's Monday, Wednesday, Friday that we have new videos come out. Today was the exception because we wanted to get Matt on here so he could talk about all the legal stuff that you guys needed answers on. So thank you, Matt. Thank you, Mike.
Yep, thanks, guys.
I'm here on Saturday. Enjoy the rest of your weekend, and we will see you guys later. Take care.
Okay, thanks. Bye.